very stock market. Oh, man. Woo!
So today, I'm going to advertise my course because I'm a good stock picker and you should pay me $20,000. What a freaking loser. Welcome back, Strongman Personal Finance. So I can never miss an opportunity to make fun of Jeremy Lefebvre. And it's been a while. Jeremy, he's gotten a break from old King Kong. But we can never forget that 95% of these stock picking clowns suck. They're garbage. They're frauds. When they pick a good stock, they keep pumping it up. Look what I picked. And if they make a bad investment decision, it just disappears. Now we're going to go check out the financials of Walgreens Boots Alliance, which got absolutely shellacked. This stock is trading I think at its lowest point since like 1997. Like that is this stock has just been going down and down and down and down, and they're cutting their dividend and they fired their CEO, and it's just and they got to transition from their, I don't know, whatever they freaking call it, Village MD. It's a disaster. Okay. This is the perfect example of why you don't invest based on dividend yield. Stop buying stocks because of the dividend yield. Consider a total market index fund. Now, before we check out Walgreens, I just wanted to review this clip that old Jeremy Lefebvre did.
But if I'm going to have to guess, and this is a standalone company in 5 years, WBA is probably anywhere from $75 a share to $125 a share, somewhere in there in 5 years from now. So, yeah,
$75 to $125 per share. Okay, we're going to see what Walgreens is trading at now. I'm a stock guru. I can just make up random numbers. Buy my course, brah.
WBA, I think it's an easy money stock, and that's why I put 7 figures in the stock.
Okay, so I actually made this video 9 months ago, and the stock was trading at basically $22. What is old Walgreens trading at now? It is now at $12.03. Just buy index funds, please. So we can see over the past 5 years, it's down 76%. And then we could see that, well, I guess since 1985, it's up if you had bought in 1985. But it's basically been trading at its low since the last time it was at this price was, 1997. 1997. I was 8 years old. 8. Okay, I'm now an old fart. I'm an old man with my own kids. So Walgreens is down massively. This is very bad. Okay, what happened to the one-day chart? This is absolute annihilation. Well, why did this happen? Walgreens cuts EPS guidance, plans to close more stores. I don't like pharmacies, okay? I know, didn't Rite Aid just declare bankruptcy? Walgreens Boots Alliance stock plummeted 22%. Its worst trading day in at least 4 decades, closing at $12.19 per share. The stock slumped on the news the company slashed its profit guidance. The second downward adjustment this year. But it dipped, guys. Okay, large company U.S. stock. Buy the dip, right? They now estimate earnings per share between $2.80 and $2.95. That's pretty crazy. Let's see what the earnings per share was over the last couple of years. Okay, so we go back and we had 4.31, 0.52, 2.95, negative 3.5. It's all over the freaking place, okay? the earnings are just freaking wild. Okay, there's probably some kind of like write-offs and impairments going on there. But that's a pretty significant drop in earnings projections. Let's see. What's the drop right there? They slashed it by they slashed earnings guidance by about 12% on one end. So that's a pretty significant drop. Investors are watching the company closely as CEO Tim Wentworth executes a new strategy for the company. So the old CEO was some I'm not even going to say it. She would have done well at NASA. But they got rid of her, and now this new guy is in here to, I guess, right the ship. He is focused on what he views as revitalizing pharmacies and pulling back on healthcare services through Village MD. They basically try to integrate where they had like, you know, physicians or whatever, and like you could go see a physician in Walgreens, and then you could just walk across and get your prescription, basically. That was kind of the concept with Village MD. They made a significant investment in Village MD to kind of build out that concept. But I guess that didn't work out because Walgreens is no longer a major stakeholder. Including the shift to downsize unprofitable parts of the business, including announcing additional store closures. Yeah, that could hurt profits. Walgreens is also fighting a problem that other smaller pharmacies are facing. Pricing pressures from prescription drugs. So we have all this competition in the pharmacy world. And on top of competition, now we have pricing pressures for prescriptions. We're at the point where the current pharmacy model is not sustainable. And the challenges in our operating environment require we approach the market differently. We are in active discussions to align incentives, ensure we are paid fairly. Okay. Company officials expressed concern over pharmacy benefit managers and their role in setting prices for prescriptions, which has squeezed the profit margin on many drugs. Because we can just predict this, right? This is so predictable, you know? So easy to predict, bruh. Branded drugs provide lower profits for pharmacies. Generics, while lower in cost, have higher profit margins. But the supply of generics has been decreasing amid ongoing shortages. So, competition, a lack of generics, which are higher profit margins. Okay. How could it get worse? The company noted that 100% of its profits came from 75% of its stores. So 25%, a quarter, 1 out of every 4 of their stores is losing money. That's pretty scary, okay? But they have yet to identify how many of the 25% will close. Let's see. Walgreens has also faced shrink, a problem plaguing the retail world at large. So I guess people are stealing. Is that what's happening? So we got pressures. Who buys stuff from Walgreens? Like, oh, I need chips. Oh, my kid needs diapers. I'm going to go to Walgreens. That's stupid. But apparently there's been a lot of theft. Okay. So everything's a freaking disaster. You know, executive turnover, slashing profits, closing stores, squeezing profit margins everywhere. It's a freaking mess. Okay. So let's go ahead and look at the income statement. Okay. So we have the statement of profit and loss here. 3 months ended May 31st, 2024. So sales year over year have slightly increased. How much have sales increased year over year? Let's see. 36,351 divided by 35,4. Sales are up a whopping 2.6%, less than inflation. Wow. Gross profit is down. Their gross profit margin is now 17.7%. How does that stack historically? Let's see. This is the profit on the top of the income statement. Did they already update this? Oh, they already did. Look at that. They already updated it. Okay. So gross profit continues, gross margin continues to shrink. That's the top of the income statement. That's cost, that's sales minus cost of goods sold. So you can see that gross margin is starting to constrict. And you can also see that operating margin is trending down over time. And you can see free cash flow margin is trending down. Margins are collapsing. Okay. If we look at revenue, it's basically flat. It's basically flat. I mean, it's up a little bit, but it's not that impressive. Oh boy, this ain't good. They cut selling, general, and admin expenses. Equity earnings in Sensora. So they have this huge or decent size investment in this company that used to be called AmerisourceBergen. And that is very familiar to me. But basically, when you have equity earnings in a subsidiary, you own a part of a company, but you don't control it. But let's say the company makes $100 in profit and you own 25% of it. Well, you would record 25% of that $100 of profit in your financial statements. That's equity earnings. So you'll see companies like, I think Berkshire Hathaway has this, where they'll own a bunch of companies. They won't control them, so they don't consolidate them, but they'll have a significant influence in those companies. And the earnings of those companies, those subsidiary companies, are reflected in the income statement of the parent company, of the company that has an ownership interest. So Walgreens has a pretty significant investment in Sensora. They also have been selling shares of Sensora, basically because they're just not doing that well, okay? So you see this line, other income right here, other income net. This is where they're recording the gain from selling Sensora stock. So if you go look at Sensora, the stock has just gone up at a 45-degree angle over the past 5 years. And Walgreens is it's kind of helping them a little bit. They're able to sell the stock at a gain. And that's where you see, this other income come from. So this 44 here is from the underlying profits of Sensora. This 254, a big chunk of that, I believe, is from gains from selling the stock. Because companies can own and sell stock too, and they can make money off stock. Okay, so earnings before interest and income tax provision. So their operating income before Sensora was $111 million. That's not that much, okay? Their net earnings, this is their profit, was $230. But if you go back and look, basically, if they didn't have Sensora, they would be losing money. Basically. Almost. So it's the gains from Sensora are a big chunk of their net earnings. It's not, they would still be profitable, but Sensora is definitely helping. Okay. So that's the income statement. Basically, no revenue growth. Gross profit is down. So margins at the top are shrinking. And they're basically a big part of their earnings is being boosted by selling stock of Sensora. Wow. Okay. Statement of cash flows. Look at this. Operating cash flow for the 9 months ended May 31st is negative. So now they have negative operating cash flow over the last 9 months. That's not very good. Okay. And that's just from the core operations of the business. That's down from $1.2 billion from the prior year. It's a pretty steep drop. They went from $1.2 billion to negative $314 million of operating cash flow. Okay. What else here? But they're able to, so they're losing cash from their core operations, but they're selling something else, proceeds from the sale of other assets. What could that be? Sensora stock, probably. And they're doing leaseback transactions. So a leaseback, I believe how this works, is you own a building, but you need cash. You need cash. You have a building and you want to keep using it, but you need cash. So what you do is you sell the building that you own, and then you immediately lease it. So you sell it to somebody else, but now you're renting the building. So you get all the cash up front, and you still get to keep the building or use it, but you're renting it. That's a leaseback transaction. So they're selling properties, and they're selling Sensora stock to kind of, help compensate for negative cash flow from operations and for purchasing property, plant, equipment. I don't know what they're doing there. Are they selling some stores and opening other stores? I don't freaking know. But that's what it looks like is going on here. Okay. Not much change in debt. You can see that it's basically a wash. Proceeds from variable prepaid forward contracts. I don't know what that is. Treasury stock purchases, 69. Basically, they're buying back a very immaterial amount of stock. Cash dividends paid. They slashed their dividend, guys. Okay. They paid $1 billion of dividends over the last 9 months. But if they're losing cash from operations, I can tell you right off the bat, the dividend's is unsustainable. If you're losing cash from your core business, why are you paying a dividend? I wouldn't. If I owned a business and I was losing money, I would call my owners and be like, hey, I'm losing money. Can I cut the dividend a little bit, please? Let me fix my ship, and then we can get back to the dividend, okay? But, yeah. So, leasebacks, selling Sensora stock. It's not looking good for old Walgreens. I'm so glad that I put $1 million. I wish I had $1 million because I would totally put it in Walgreens. If the gods made me famous on YouTube and gave me millions of dollars, I would buy Tattooed Chef, Smile Direct Club, Voyager Digital, and I put $1 million of Walgreens instead of just buying VT. Okay. Here's our balance sheet. Really not much change on the current asset side. Let's see. Well, they're not running a very good current ratio, but that seems to be what they've been doing consistently. Property, plant, and equipment has gone down. I wonder how much of that is from sales. Let's see. Leases have basically stayed the same. So they're selling some of their properties. We saw that with the leaseback transactions. Goodwill has gone down massively. That was probably an impairment. Goodwill is when you acquire another business for more than the fair value of its net assets. But if you do an analysis and you determine the business isn't going to produce as much cash flows as you thought, you write it down. So it hits the balance sheet. So if we actually look, let's see, the total equity is $15 billion, which is the amount of goodwill. So their tangible book value is actually negative. Their real assets that you can touch with your fingers and your schlong are less than their debts. That's a little scary. Okay. I mean, how much do they have? Equity method investments. Yeah, I mean, they still got, the Sensora stock, they still got a decent amount, it looks like. I don't know what the fair value of it is. Note 5. Sold shares. Okay, so that variable prepaid forward transaction was selling Sensora stock. So basically, Sensora is going to help them, basically, because they have a decent amount they can sell. But that's not going to last them forever. So things are not looking very good at Walgreens. What are y'all's thoughts? Let's see. Hello. Walgreens tanked, it did. That's stupid. I don't care. What a clown company. If you gave me $1 million, it would not go into Walgreens. The top 10 stocks don't get a market return versus 25 years or less if it's big trash. Let's see. But it's got an 8.2. Well, now, what's the dividend yield now? Well, now the dividend yield is 12%. So you get a 12% return if you buy it. Bacon beams in the house. Did you see I did. It was amazing. I feel famous now. A shoe could outperform Lafufu. I mean, my kids' college funds are crushing Lafufu. They're in VT. Let's see. I find it hard to believe this clown has money to lose. Hey, man, you sell courses. You can make a fortune. Sell the dream. No, not there. Oh, dog. No. VT for the VT always wins. Let's see. Fat divorcee loses money in divorces. Christopher Fell. That's a interesting combo of my name. Strongman. Camaro is going to put a hit on you. You better. Oh, man. Come here. He's an assassin. He's a Marine assassin. I'm so scared. Oh, he's going to beat me up. Strawman, I found this channel called J-Nog. He's a middle-aged, childless bachelor who drinks a lot and rants about everything. Can you please expose him? Well, if you pay me $50, I may be more enticed to expose him. If you randomly pick stocks, you'd outperform Lafufu. His track record is amazing. And that is true. I don't dispute that. The courses can't be making him much now. He owns a few houses. And no, he's not making what he was making during the clown market. But he's still making more than most of us. Way more than most of us. With his Patreon and his courses and all that stuff. But anyway, that's Walgreens. Some people wanted me to cover it. And one of my thoughts, I don't know why you would buy it's a pharmacy. Super low margins, flat revenue, probably negative after inflation. Walgreens was a big thing during the clown-demic. Because everybody needed their shots. Everybody was going to Walgreens. Everybody was bullish on Walgreens. And then the clown-demic ended. Shocking. And Walgreens is now in trouble. Rite Aid's gone out of business, last I heard. Walgreens is in trouble. It's a highly competitive industry, getting constricted by drug prices and shortages. I don't know what to say. CEO got fired. What a freaking disaster. Got to do Redbox. They missed payroll. Oh, my God. CVS is tanking. Uh-oh. Uh-oh. All right. Well, I think I'm going to go take a bath, and then I'm going to go to bed. Okay? You guys have a wonderful, delicious day. Cheers.
Holy smoke, is this ain't no joke, as I was literally about to go to bed.
Oh my word, look at that.
Wow, do we have a lot to get into here today.
Woo, 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 woo.